Hello everyone. So today we are going to start Introduction to Accounting, which is from your CA Foundation Accounting. So before going into the subject itself, let us understand what happens in this subject and what we are supposed to do. So for that, let's take an example here. Let's take an example where we are having Mr. A who wants to purchase a bike. Let's say Mr. A wants to purchase a bike whose cost is 2 lakh rupees. So as Mr. A wants to purchase the bike, he is not having this 2 lakh rupees with him. So in that case, he wants to go for the finance. So as he wants to go for the finance, the finance company said that, sir, if you make a down payment of 30,000 rupees, on the remaining amount you can have the finance. So that means after paying 30,000 rupees, so his loan amount would be 1,70,000. This is nothing but your finance, where Mr. A need to pay this finance to the finance company. Now the finance company said that the duration of the payment of loan was 24 months. So the duration was 24 months. Your loan is 1,70,000 and your duration 24 months means your EMI or equated monthly installment where Mr. A need to pay would be around 7,100. So that means if Mr. A wants to purchase this bike, in that case Mr. A need to pay an amount of 7,100 towards the finance. Now, so as Mr. A wants to purchase this bike on the finance, now he need to make a decision. So what he need to make? He need to make a decision. What type of decision, sir? Whether to buy the bike or not, or whether he can afford the bike or not, he need to make a decision. So for that, he wants to know, for making a decision, he wants to know his savings. So he wants to know his savings. So in that case, he went to home and calculated his monthly expenses, where Mr. A is paying an amount of 15,000 rupees towards rent. He is paying the insurance for 5,000 rupees and he is paying household expenses. He is having household expenses worth of 10,000 rupees. So your total expenses, Mr. A's total expenses would be 30,000 rupees per month. Now let's assume Mr. A is a salaried person. Let's assume Mr. A is a salaried person. In that case, Mr. A would be receiving his salary. Let's say he is earning an amount of 50,000 rupees towards salary. Now he wants to know his savings. So in that case, from the salary, if we reduce the expenses of 30,000 rupees, we can know the savings of Mr. A, that would be 20,000 rupees per month. Yes or no? Now, so with this information, can Mr. A take a decision whether to buy the bike or not? Yes, as he is having the sufficient amount, Mr. A can make a decision whether to buy the bike or not. Now, what is accounting, sir? In general, every individual wants to keep a record of their income and expenditure. Every individual wants to keep a record of their income and expenditure to have an adequate information of an economic activity. Every individual wants to keep a record of their income and expenditure to have an adequate information of an economic activity as an aid to decision making. So that means for the purpose of taking the decision, every individual wants to know their information, their savings, whether they can afford or not. So this is nothing but your accounting in general. Every individual wants to keep a record of their income and expenditure to have an adequate information of an economic activity as an aid to decision making. So this is from the individual point of view. Yes or no? Let's continue. Let's have another example. Let's say we are having Mr. X, where he started a business. Mr. X started a business, let's say a furniture business. Mr. X started furniture business. So in that case, Mr. X would be purchasing the wood and he would be converting the wood into furniture. Yes or no? So his main business would be converting the wood into furniture. So he would be purchasing the goods, that is wood, and for the purpose of converting the wood into furniture, he need to make the wages, he need to pay the wages. Yes or no? So let's say he needs to pay some rent. Let us assume Mr. X purchased the wood worth of 10,000 rupees and he paid wages for the purpose of converting the wood into furniture. Let's say he paid 1,000 rupees, and let us assume the rent was 1,000 rupees. So in that case, how much would be the expenses of the business, sir? In total, it would be 12,000 rupees. Now, let's say upon selling this furniture, let's say the amount which we realized was, let's say 15,000 rupees. Upon selling the furniture which was converted from wood to furniture, let's say we have earned 15,000 rupees. So after reducing your expenses of the business, which is 12,000 rupees, you would be left over with the 3,000 rupees. This 3,000 rupees is nothing but the profit of the business. Now, in case of individual, it is nothing but your savings. But in case of your business, it would be the profit. The main motive of starting a business for the owner would be to generate the profits. Yes or no? So this is from your individual point of view. This is from your company or the organization point of view. So that means every business wants to keep their income and wants to keep a record of their income and expenditure to have an adequate information of an economic activity, to take some decisions in case of business, whether it could be for expanding the business or to start a new business or anything it could be, depending upon the management's decision. So this is in general what accounting does. Now, so after understanding the example, let's continue. What is accounting, sir? So according to the committee on terminology, set up by AICPA, your American Institute of Certified Public Accountants. So according to AICPA, the committee on terminology set up by American Institute of Certified Public Accountants have formulated the following definition. So according to them, what is accounting? Let's understand here. So according to AICPA, accounting is an art. Accounting is an art of recording, classifying and summarizing in a significant manner and in terms of money transactions and events transactions and events which are in part at least of financial character and interpreting the results thereof. So this is nothing but the definition of accounting. So the Committee on Terminology set up by AICPA or American Institute of Certified Public Accountants have formulated this following definition. So according to them, accounting is an art of recording, classifying and summarizing in a significant manner and in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. So according to them, accounting is an art. Sir, what is the meaning of art? Art is nothing but which is not science. Art is nothing but which is not science or which follows rules and formats. Accounting is the art. Accounting is nothing but accounting is an art. Art is nothing but which is not science or which follows rules and formats which are given by AICPA or other institutes. So that means for accounting, for preparation of accounting, we are having some rules and we are having some formats which we are supposed to be followed. Yes or no? Of recording. Sir, what we are recording? We are recording the data. Sir, what we are recording? We are recording the data. Data of whom? The business. So what data we are recording? We are recording the data of the business. So where we are recording? We are recording the data in the books of accounts. We are recording the data of the business in the books of the business. Yes or no? So we are recording in the books. We are recording the data of the business in the books of accounts through journal. We are recording the data in the books of accounts through journal. Sir, what is journal? So that is nothing but our next topic we are going to learn. Classifying. Sir, what is the meaning of classification? Classification is nothing but separating. Sir, what we are separating? We are separating the data which has been already recorded in the books of accounts. So we are separating the data. Why we are separating, sir? Let's understand here. So here in our business we are having purchases, wages, rent and all. Yes or no? So that means after recording this data in the books of accounts, so we are separating the purchases. All the purchases throughout the year would be separated and recorded as a group at one place. That is nothing but separation. So all the wages which are paid throughout the year would be separated and would be recorded as a group at one place. All the rents which are paid throughout the year would be separated and recorded at one place as a group. So that means the recorded data we are separating through ledger. So based on the nature of the data, which was already recorded, we are separating through ledgers. What is ledger, sir? That is our next topic we are going to start. Okay, let's continue. Summarizing. Sir, summary of what? Summary of income. Summary of income of the company by preparing your trading account, your P&L account and the balance sheet. The summary is nothing but your summary of what? Your income of the company is projected through preparing your trading, P&L and balance sheet. So these are nothing but your separate chapters where we are going to learn in the near future. in a significant manner. Sir, what is the meaning of significant manner? Significant manners is nothing but your following the formats. Sir, what formats? You're having the format for your journal, you're having a format for ledger, you're having format for preparation of trading P&L and balance sheet, which you're supposed to follow. So by following these formats, you're supposed to prepare your journal, your ledger, your trading, P&L and balance sheet. And in terms of money, sir, what is money? Money is nothing but your means of exchange. Money is nothing but your means of exchange. That means those data, that data which can be measured in terms of money only should be recorded. That data, whatever data you are having in your business, that data which can be measured in terms of money only should be recorded. Otherwise, you are not supposed to be recorded. Monetary terms, that data which can be measured in terms of money only should be recorded. Transactions. Sir, what is the meaning of transaction? Your transaction is nothing but an agreement. Transaction is nothing but an agreement. Let's understand here. So as we are having Mr. A, where he is supposed to pay a rent of 15,000 per month. That means Mr. A and the landlord is having an agreement that Mr. A needs to pay 15,000 rupees of rent every month. Yes or no? Insurance premium. Mr. A is paying insurance premium. So that means Mr. A and the insurance company is having an agreement that Mr. A need to pay 5,000 rupees towards his premium. Let's come here. Business. In the business, as you're having purchases, means purchases are nothing but the agreement between the company and the supplier. That is nothing but an agreement. Wages, as you're paying wages, means the company would be having an agreement with the workers that the company needs to pay 1,000 rupees towards wages. Yes or no? So as these are nothing but the agreements, so can I say that agreements are nothing but the transactions? So that means purchases is nothing but a transaction to the business. Wages is nothing but a transaction to the business. Rent is nothing but a transaction to the business. Whether it could be insurance, whether it could be rent, whether it could be electricity, taxes, purchases, sales, your telephone expenses, postage expenses, stationery, anything it could be. That agreements, whatever were incurred between the business and the other parties, are called your transaction, because those are nothing but the agreements. And events. So what is the meaning of event? Event is nothing but the result of the transaction. The result of transaction. That means the result of an agreement. Let's understand here. Let's say, what is an event? Let's understand what is an event. Let's say we are having Mr. A who sold goods, or let's say Mr. A purchased 10,000 worth of goods. Out of 10,000 worth of goods, he sold out of 10,000 worth of goods, Mr. A sold 8,000 worth of goods for 10,000 rupees. So he sold 8,000 worth of goods for how much? 10,000 rupees. This is your cost and this is your selling price. Yes or no? So that means out of 10,000 he sold only 8,000 worth of goods for 10,000. Yes or no? So that means you are having 2,000 profit. Leave it aside. Let's assume that 2,000 whatever we are selling above is nothing but your profit. Okay. Now continue. So as you sold 8,000 out of 10,000 means you were left over with a 2,000 rupees of stock. So can I call this stock, whatever left over after selling the goods, as closing stock? Yes or no? Now let us understand. So this closing stock of 2000 was arrived. So this 2000 worth of closing stock has been arrived because of this sales only. Yes or no? The sale is nothing but an agreement. So sale is nothing but a transaction. So because of this agreement or a transaction, we were left over with a closing stock of 2000 rupees. Yes or no? So can I say this 2000 rupees of closing stock is nothing but a result of this sales? So can I call this closing stock as an event? Or because of the sales only, you're having a profit of 2000 rupees. Because of the sales only, you're having a profit of 2000 rupees. So can I say this profit is also nothing but a result of an agreement or a result of transaction? So can I say this is also nothing but an event? Yes or no? Now, which are in part at least of financial characteristics and interpreting. Sir, what is the meaning of interpreting? Interpreting is nothing but your communicating. Interpreting is nothing but your communicating. What we are communicating? We are communicating the results. What we are communicating? We are communicating the results. Sir, what is the meaning of results? Results are nothing but your financial statements. Results are nothing but your financial statements. So these financial statements we are communicating. These financial statements we are communicating to whom, sir? We are communicating to the financial information. We are communicating these financial statements to the financial information users. Now, so according to AICPA, what is accounting, sir? Accounting is an art of recording, classifying and summarizing in a significant manner, and in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. Now, let us understand. As the information of the company or as the information of an organization, that is nothing but your transactions, your business, your profit, your sales, your income and expenses. That is nothing but your information. As the information of the business or an organization is spoken out through accounting, as the information of an organization is spoken out through accounting, the accounting is called as the language. The accounting is called as the language of the business. As the information of an organization is spoken out through accounting, accounting is called the language of the business. So this is about your definition of accounting. According to AICPA, what is accounting, sir? Accounting is an art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. So now, so to whom are we interpreting? So we are communicating, yes or no? We are communicating to whom, sir? Financial information users. So we are communicating the financial results or financial statements to the financial information users. Sir, who are our financial information users? Let us understand here. Your financial information users are classified into two categories, that is your internal and external. Financial information users are classified into internal users and external users from the point of view of management. So your users are classified into two categories from the point of view of management. That means those people who participate in the day-to-day activities of the management are called internal users. Those people who are not participating in the day-to-day activities of the management are called external users. So from the point of view of management, your users are classified into two, internal users and external users. So those persons who participate in the management are called internal users. Those persons who do not participate in the management activities are called external users. So who are our internal users? Let's continue. Your first internal user would be owner, partners, your officers, managers, and board of directors. Now, so you're communicating the information, yes or no? So you're communicating the information to the financial information users. Now, so with this financial information which is provided to the internal and external users, the internal and the external users would be taking a rational decision. Would be taking a rational decision. So what type of rational decisions? That would be different. That would be different from every person to person. Yes or no? Now, owner. Who is the owner? Owner is nothing but the owner of the company. Now, so the main motive of starting a business would be for generating the profits. Yes or no? The main motive of starting a business would be to generate the profits. Now, so by the information which is provided by the company, what type of rational decision can be taken by the owner, sir? The decision is nothing but, if the company is doing good, he can continue the business. If the company is not doing good, he can close the business. Yes or no? So to know his financial status, Mr. Owner would be taking a rational decision depending upon the financial statements. That means if the financial statements are good, he can continue the business. If the financial statements are not good, he can close the business. So same as your owner, the partners are nothing but the multiple owners of the firm, partnership firm. So same as your your partners would also be interested to know their profits in the business. So that means by providing or by communicating the information, the partners would be taking a rational decision whether to continue in the partnership or not. If the partnership firm is doing good, he can continue. If the partnership firm is not doing good, then the partner may exit from the partnership firm. Now, so in case of sole proprietorship, it would be owner. So in case of your partnership firm, that would be your partners who would be participating in the management. Yes or no? But whereas in case of your company, the owners wouldn't be participating in the management. So they would be appointing the professionals for the day-to-day activities of the company. So that is nothing but your officer, managers and board of directors. So depending upon their necessity, the information which is provided by the company, they would be evaluating the different type of information according to them for the purpose of management. Now, external users. Let's continue with external users. So who are our external users? The external users are nothing but who is not participating in the management. Now, our first external user would be investor. Sir, who is the investor? Investor is nothing but a person who invests the money in the company. So that means by checking these financial statements, Mr. Investor can take a rational decision whether to buy the stake in the company or to hold the stake in the company or to sell the stake in the company. That means by looking into the financial statements, he can take a rational decision whether to buy the stake in the company. That means if the company is doing exceptionally good, he can buy more stake in the company or more shares in the company. If the company is not doing that good, he can hold on to his stake. Or if the company is not doing good, he can sell his stake in the company. So next one. Supplier. Your next external user would be supplier. Who is the supplier, sir? A supplier is a person who supplies the goods to the company on credit basis. On what basis? On credit basis. So that means as he is selling the goods on the credit basis, he would be giving us a credit period. So Mr. Supplier would be giving a credit period for the company to pay the amount on the goods. So that means, let's say he gave some 2 months of credit period. That means, so after purchasing the goods, after 2 months of purchasing the goods, he need to pay the amount. So that means after looking into the financial statements of the company, if the company is doing good, his amount wouldn't be at risk, yes or no? But in case if the financial statements of the company is not good, his capital or his amount would be at risk, yes or no? So in that case, what type of rational decision can the supplier take, sir? To increase or decrease the credit period. That means in general, he is giving 2 months of period for the payment of amount, yes or no? Because of the financial statements, as the company is not doing good, he is reducing his credit period from 2 months to 15 days. Because his capital would be at a risk, yes or no? Next one. Third one. Customer. So, the customer would be interested to know the continual supply or continuity of the product. The customer would be interested to know the continuous supply of the product. So let's understand here. Let's say we are having a company which is a TRF, where we are manufacturing the tires. Let's say we are having a company which we are manufacturing the tires, where our customer is Tata. Who is our customer? Our customer is Tata company. So as a Tata is a customer, what type of rational decision can Mr. Ratan Tata take depending upon the financial statements, sir? If the company's financial statements are good, Mr. Ratan Tata can continue with this business because these goods are nothing but his inputs. So that means if our financial statements are not good, his supply chain would be broken. So that means he is having some commitments to deliver the goods. If he rely on our product, if he relies on the TRF product, so he cannot supply the goods to his customers, yes or no? So in that case, if the financial statements are not good, Mr. Ratan Tata would be going. That means our potential customer would be going to the competitor. Yes or no? So the customer would be taking a rational decision whether to continue with the business or to go for the competitor. Next one. Fourth one. Government agencies. Sir, what type of rational decision can the government agencies take depending upon the financial statements, sir? That is nothing but to levy the taxes or to provide the subsidies or not. The government would be depending on the financial statements of the company. Yes or no? Now let's continue. Your fifth external user, that is nothing but your lender. Sir, who is a lender? A lender is a person who lends the money to the company on interest basis. Yes or no? So that means he would be giving you some loans. So as he is giving some loans to the company, what type of rational decision Mr. Lender can take depending upon the financial statement, sir? As his capital would be at a risk, as his capital, that means as his amount, that is loan would be at risk, he wants to know whether the company would be paying his loan amount, which is a principal plus interest. He would be keen to know whether the company would be paying his loans, which is nothing but principal plus interest, upon falling due. So that means upon falling due, whether the company is going to pay his amount or not. So depending upon that information, Mr. Lender can take a rational decision whether to increase the interest amount or to decrease the interest amount. If his capital is at risk, he would be increasing the interest, yes or no? If the capital is not at risk, if the company is doing so good, so he can reduce some interest percentage, yes or no? So this is nothing but your financial information users, where they are divided from the point of view of the management into internal users and external users. Now let's continue. Who are our internal users, sir? Our internal users would be owner, partner, officers, managers, and board of directors. Who are our external users, sir? Investor, supplier, customer, government agencies, and your lender. Next, continue. Subfields of accounting. Our next topic would be subfields of accounting. So that means your accounting was subclassified into various categories. Your accounting is subclassified into various categories. That is your financial accounting, your financial accounting, your management accounting, cost accounting, human resources accounting, and social responsibility accounting. Your accounting was subclassified into various categories. That is your financial accounting, management accounting, cost accounting, human resources accounting, and social responsibility, or it can be called as your corporate social responsibility. Now, what is financial accounting, sir? It covers financial accounting covers your preparation. Financial accounting covers your preparation and interpretation. Preparation and interpretation of financial data. So that means your financial accounting would cover preparation and presentation of financial data. That is nothing but your accounting. Yes or no? Management accounting. It is concerned. Management accounting is concerned with the internal reporting. Management accounting is concerned with the internal reporting to the management. So what is management accounting and all, you are going to learn in your cost accounting in your CA Inter. Costing. Sir, what is cost accounting? Cost accounting is a prepared to know, to calculate, is prepared to calculate or for identification, for calculating or identification of cost of the production, cost of the product or cost of production. So this is also would be learned in your, this is also would be covered in your CA inter. Human resources accounting. Human resources accounting is prepared to know the investment. Human resources accounting is prepared to know the investment made in human resources, such as your training to the employees. Now, CSR, social responsibility or corporate social responsibility. India is the first country in the world to mandate the corporate social responsibility to the companies in India. India is the first country to mandate, so make CSR mandatory to the companies in India. So your corporate social responsibility or social responsibility accounting is prepared to know the social, for the purpose of social awareness. Corporate social responsibility is prepared for the purpose of social awareness. So what type of social awareness? Let's understand. So you're having Mr. Tata, yes or no? Tata Research Foundation is engaged in the study of AIDS. They're having a separate center where they are studying on the AIDS. You're having your Ultratech Cement Company. Ultratech Cement Company is engaged in the organic farming. You are having Mr. Mahindra and Mahindra, yes or no? So he is engaged into girls' education. So these are nothing but which is prepared for the purpose of social awareness. That's it. So this is about your subfields of accounting, where accounting is subclassified into various categories. That is your financial accounting, management accounting, cost accounting, human resources accounting, and social responsibility accounting or corporate social responsibility. Now let's continue. Objectives of accounting. Sir, what is objectives, sir? Objectives are nothing but your goals. The objectives are the goals of accounting. What are the goals of accounting, or what is objective of accounting? So your first objective, what is the first goal of accounting, sir? That is nothing but accounting is an art of recording, yes or no? So your first objective would be recording the data. Recording the data. Where we are recording, sir? We are recording the data in the journal, yes or no? That is nothing but you are recording your transactions. Recording the data or recording the transactions. The next objective is nothing but ascertainment of the performance. Ascertainment of performance. Sir, what is the meaning of ascertainment of performance? Your performance is nothing but by preparation. So you are going to ascertain your performance by preparing your trading and P&L account. So that means the next objective is nothing but to prepare your trading, P&L and P&L account. Now your next objective is nothing but your ascertainment of position. So what is your next objective of your accounting, sir? That is nothing but ascertainment of position. Position is nothing but your balance sheet. So that means by preparing your balance sheet, you are going to ascertain your position of the company. And your last objective is nothing but your communicating. Sir, what we are communicating? We are communicating the liquidity position. You are communicating the liquidity position and your solvency position of the company. So you are communicating the liquidity position of the company and the solvency position of the company to the financial information users. Sir, what is the meaning of liquidity position? The ability to pay one's debt in the short term is called liquidity position. The ability to pay one's debt in the long run. The ability to pay one's debt in the long term or long run is called the solvency position of the company. So that is about your objectives of accounting. So what are our objectives, sir? What are the objectives of accounting, sir? Your first objective would be recording of financial data or transactions. So that means recording of the transactions. So what is your second objective, sir? Second objective is nothing but ascertainment of performance by preparation of trading and P&L account of the company. Next one, third objective is nothing but ascertainment of position by preparing the balance sheet of the company. And the last objective or the goal is nothing but communicating the liquidity position and the solvency position to the financial information users. So that is nothing but your objectives of accounting. Now let's continue. Let's continue. Let's have an example here. Let's say we are having a company ABC where they're having the purchases, where they're having purchases, they are paying some wages, they're having insurance, they are paying some rents and etc. in the company, let's say, and also they are having some sales. These are nothing but the financial data, yes or no? So we are having ABC company where they are having different transactions. A company is having transactions in the business throughout the year. So these are nothing but the transactions of the business. Now, so as these are the financial data or the transactions of the business, these data or the transactions need to be recorded where, sir? Need to be recorded where? Need to be recorded in the books of accounts, yes or no? So as we are going to record in our books of accounts or books of accounting, where we are supposed to record, we are recording the books of accounting. Now let's say these are nothing but our books of accounts. Let's say these are our books of accounts and we are going to record it as purchases, wages, insurance, your rent and sales, yes or no? So that means as per the definition of the accounting, as these are nothing but the financial data of the company, these data need to be recorded in the books of accounts, yes or no? Now yes, as per the definition, we are going to record the data in the books of accounts. Now before that, so as we are supposed to record, are we recording the data? Are we recording the data directly into the books of accounts or not? That is the main question, yes or no? So as this is nothing but the financial data, yes, as per the definition, we are supposed to record in the books of accounts. But are we recording the data, rough data, directly into the books of accounts? Because these books of accounts are called as the book of book of original entry. So as these books where you are supposed to record the transactions are called as book of original entry, are you recording the data directly into this original books or original entry, or are you going to record it somewhere else? Because as this is the rough data, you are supposed to record this rough data for the purpose of verification, yes or no? You are not going to record the data directly into your original entry, original books, yes or no? So that means the data, first of all, it would be recorded in a separate book is called as your bookkeeping. That means you are recording the data firstly into the bookkeeping, and from that bookkeeping you are going to record the transactions in the book of accounts, or that is nothing but your original entry. That means your bookkeeping is nothing but a recording phase. Bookkeeping is nothing but a recording phase which is internal part of the accounting. Bookkeeping is nothing but a recording phase which is internal part of the accounting, where the bookkeeping would be acting as a source document. Source document of what? This data. So that means after recording in the book of entry and after recording the data into the book of entry, you are going to check the source document. That means you are going to verify the documents, and after verification only you are going to record it in your books of accounts, that is nothing but your book of original entry. Next, as you are recording the data, that means the transactions in the book of accounting, only after recording the data in the book of bookkeeping, yes or no? So that means from the data of bookkeeping you are recording in the accounting, yes or no? So that means the process of accounting starts where the process of bookkeeping ends. So that means after recording in the bookkeeping and after checking the source document only, you are going to record in the book of accounting, yes or no? So that means the process of accounting, that means recording in the accounting starts where the process of bookkeeping ends. Yes or no? That means after recording in the bookkeeping only, you are going to record in the book of accounting by checking their source document. Yes or no? This is nothing but your bookkeeping. The person who is responsible to record the data in the bookkeeping is called the bookkeeper. Yes or no? So that means you are having books of accounts, that means you are having bookkeeping and also you are having accounting. So now we are going to learn the major differences between your bookkeeping and accounting. The difference between your bookkeeping and accounting. Let's understand. First of all, what is bookkeeping, sir? Your bookkeeping is nothing but a recording phase which is internal part of the accounting. Yes or no? Bookkeeping is nothing but the recording phase. Accounting is nothing but the summarizing phase. Accounting is nothing but the summarizing phase. Now, next one. What is the next? The person who is responsible to record in the bookkeeping is called your bookkeepers. The persons who are responsible to record in the accounting books of accounting is called accountants. Next one. So as you're recording the data from the bookkeeping into your accounting, so can I say this bookkeeping is nothing but the basis for accounting. Your bookkeeping is nothing but a basis for accounting. Yes or no? So that means you're recording the data in the bookkeeping first, and after checking their source document, you're recording in your books of accounts. Your accounting is nothing but your language of a business. Language of business is nothing but as the information of the business is spoken out through the accounting is called as the basis, language of the business. Next one. There are no subfields in the bookkeeping, whereas in case of your accounting you're having subfields of accounting. That is nothing but your financial accounting, management accounting, cost accounting, human resources accounting, and corporate social responsibility. Next difference. Managerial decisions. The managerial decisions cannot be taken based on the bookkeeping. So that means as this is nothing but a recording phase, you're just recording the transactions. That's it. You're not even separating the transactions. You're just recording the rough data of the business here. So based upon that rough data, you cannot analyze what need to be happened and what you're supposed to do. So that means the managerial decisions cannot be taken based on the bookkeeping data. Whereas your accounting is, based on the accounting, you can take the managerial decisions. So that means managerial decisions can be taken. Next one. Financial position. That means balance sheet. Financial position cannot be ascertained from the bookkeeping, but your accounting is nothing but a process of preparing your financial position. That means financial position can be ascertained from the accounting. Financial position cannot be ascertained from the bookkeeping because it is nothing but a rough data. Now, this is nothing but your difference between bookkeeping and your accounting. Bookkeeping. What is bookkeeping, sir? Bookkeeping is nothing but a basis of accounting or recording phase, or which is nothing but a source document, and the process of accounting starts where the process of bookkeeping ends. So that is nothing but your difference between your bookkeeping and accounting. Let's continue. Your next topic is nothing but your relationship of accounting with other disciplines. Relationship of accounting with the other disciplines. Now, let's continue. So what are the other disciplines and what is the relationship between that other disciplines with the accounting? Let's understand here. Economics and the relationship with accounting. Law and the relationship with law and the relationship with accounting. What is the relationship between law and accounting? Your mathematics. The relationship between the mathematics and accounting. The relationship between the statistics. The relationship between the statistics and accounting. Management. The relationship between the management and accounting. Relationship of accounting. It would be easy. Relationship of accounting with other disciplines. Now, your first discipline would be your economics. Sir, what is economics? So, economics. Let's understand what is the relationship between economics and accounts. Come here. Economics is viewed as the rational. Economics is viewed as the rational decision making. Economics is viewed as the rational, or economics is viewed as the science for making a rational decision. Economics is viewed as the science for making a rational decision by using the scarce resources. Economics is viewed as a science of rational decision by using the scarce resources. Your accounting, whereas your accounting is viewed as a statement. Accounting is viewed as a statement which provides the data to the financial information users, where that financial information users would be taking a rational decision. Based on these financial statements of the company, which is provided by the financial accounting, the financial information users would be taking a rational decision. That is the relationship between your economics and accounting. That is nothing but your making a rational decision. So in case of economics, the rational decision would be made by using the scarce resources. But in case of your financial accounting, the rational decision would be made by the financial information users by checking the financial statements of the company. Yes or no? Now, law. What is the relationship between your law and accounting? The company itself is created. Company itself is created and controlled. Company itself is created and controlled by the Companies Act. Act is nothing but your law. Partnership Act. Yes or no? So the company or the organizations are created and controlled by the law itself, whether it could be Companies Act or Partnership Act or Sale of Goods Act or anything it could be. The relationship controlling. Next one, mathematics. The algebraic form of mathematics can be converted into a simple forms of plus, minus, divided by and into. This is the relationship between mathematics and accounting. The mathematical formulas of the formulas of the mathematics can be converted into a simple algebraic form. That is nothing but your plus, minus, divided by and into. These are used in your financial accounting. That is nothing but the relationship. Next one, statistics. Accounting is precise. Accounting is precise to its very last paisa. Accounting is precise to its very last paisa. That means upon preparation of your financial statements, let's say you're having 10,098 paisa. In that case, even this 98 paisa is to be reported, or it need to be recorded, yes or no? Accounting is precise to its very last paisa. Even paisa should be recorded. But for the purpose of decision making, these paisas cannot be useful, can be ignored. For the purpose of decision making, this precision is not important. Hence the statistical approximations are sought. That means whenever you're having something called as 10,098 paisa, you're going to round it off. You're going to round it off as 10,000 for the purpose of decision making. This rounding off or approximations is the relationship between your accounting and statistics. Next one, management. As the accountant is nothing but the part of management, he understands the data. And the data can be molded, for the purpose of management. As the accountant is nothing but a part of management, as he understands the data, that data can be molded for the purpose of the management. The data can be molded for the purpose of management. So this is nothing but the relationship between your accounting and other disciplines. The other disciplines are nothing but your economics, law, mathematics, statistics, and your management. Now let's continue. Our next topic would be functions of accounting. Functions of accounting. Your first function, measurement. Comparison, government agencies, decision making, forecasting, and control. So what are the functions of accounting, sir? Measurement, comparison, government agencies functions, decision making, forecasting, and control. Sir, what type of measurement? So you are going to measure the financial statements within the organization. So you are going to measure the statements, yes or no? Measurement. Next one, comparison. So what type of comparison you can make, sir? Internal comparison and external comparison. Within the organization comparison, and outside the organization, that is nothing but industry wise comparison. How my business is how the profits, what are the differences between the profits of our company and the other what we can say industry wise profits. You can compare the financial statements of our company and the industries which are in the same business. Next one, government agencies. So how it could be useful? For the purpose of levying taxes, subsidies and all. Next one, decision making. So what type of decisions? So depending upon the financial statements, for the purpose of decision making, the financial information would be useful for the financial information users. Next one, forecasting. So depending upon the past experience, you can forecast the future performance. So based upon the past experience, you can expect, or you can forecast the future performance of the company. Control is nothing but the financial, the accounting would be used for the purpose of controlling the weaknesses of the operating systems of the company. By checking, or by checking the loopholes of the operating system, or by identifying the loopholes of the financial statements, the accounting can suggest to the management to exercise the control in the operating system. So this is nothing but your functions of the accounting. So functions of the accounting. So how can we remember this financial statements? That would be your MCG. So to remember your functions of accounting, there is something called as a small story. MCG ground, DFC chicken. Your MCG ground and DFC. So M is nothing but your measurement. As you would be having a lot of things to remember in your examination, so by this it would be easy to understand the functions of the accounting, because you need to learn a lot. Yes or no? So you would be having a lot of things going on in your mind upon examination, so it would be easy to remember for you. MCG, M is nothing but your measurement. CG, MCG ground, DFC chicken, Deccan fried chicken. It would be better. Deccan fried chicken. MCG, Deccan fried chicken. So for understanding your functions, that would be easy. So what are our functions of accounting, sir? Your functions of accounting is nothing but your MCG, DFC. M is nothing but your measurement. Measurement is nothing but your, based on the past experience, or based on the past performance, based on the past records, you are going to measure the financial statements of the company. Next one, comparison. So you are going to compare the financial statements of the company within the company and outside the company, that is industry wise. So these are nothing but your functions of accounting. Next, let's continue. Accounting cycle. Our next topic is nothing but your accounting cycle. Accounting cycle. So your accounting cycle starts with your identification of the transaction. Your accounting cycle would be starting from identification of your transaction and ends with the preparation of financial accounts or final accounts. So what is the first step, sir? Your first step would be identification of transaction. Your next step would be collecting the business document. Collecting the business document. Business document is nothing but your source evidence or documentary evidence of the transaction. And your third cycle would be your recording. And your fourth cycle would be posting. If that is not so, collecting evidence, recording is nothing but your journals. Yes or no? Journal entry. Next, posting is nothing but your after recording separating. Separation is nothing but your based on the nature of the transaction you are going to separate. That separation is nothing but your posting. So posting through the ledgers. Next one. If the transaction is not the last transaction. That means if that is not the last transaction of the accounting year, then your cycle continues with identification. The next step is nothing but again you are going to identify the next transaction, collecting the business document, recording the data in your journal entry, posting through your ledgers, and you should continue. If that is also not your last transaction of the accounting year, then your cycle continues until if it is a last transaction of the financial year. If that is the last transaction of your financial accounting year, then you would be preparing your financial statements. That would be your fifth stage. After preparing the trial balance, you need to adjust. That is nothing but your adjusting entries. So your next step would be adjusting your entries. And after adjusting the entries, you should closing entries. So this is nothing but your next step. After closing, you need to transfer or transferring entries. And after transferring, your last step, that is nothing but your preparation of final accounts. What is your accounting cycle, sir? The accounting cycle starts with your identification of transaction in the business. And after identifying whether it is a transaction or not of the business, you need to collect the business document. Business document is nothing but your source document, a valid proof that it is our transaction. And after collecting the business document, it need to be recorded. Where you are going to record? You are going to record it in your journal entry. And after recording in the journal entry, based on the nature of the transaction, you are going to separate it through ledgers. If that is not your last transaction, your accounting cycle continues until it is a last transaction of the financial year. If that is the last transaction of the financial year, then you are supposed to prepare your trial balance. After preparing the trial balance, if there is any adjustment entries, you are supposed to make the entries for adjusting entries. And after that, you need to close some entries and transferring entries. You would be having some transactions which are supposed to be transferred. And after that, you are supposed to prepare your final accounts. That is nothing but your preparation of trading, P&L and balance sheet. So these are nothing but your upcoming chapters where we are going to discuss it in detail. So this is nothing but your accounting cycle. Let's continue. Our next topic would be evolution of accounting. History of accounting, or evolution of accounting, or history of accounting. Let's continue. The accounting is as old as the usage of money itself. Accounting is as old as the usage of money itself, but in 13th century, it was a primitive till 13th century. It was used as a primitive mode, or it is in the early stages of evolution. But in 15th century, Dr. Fra Luca Pacioli, he is termed as the father of accounting. Fra Luca Pacioli has developed the accounting system, which was already there, which was already existed. He has developed that accounting system. He just developed that accounting system and discovered the double entry system. So Fra Luca Pacioli has developed the accounting system which was already presented and discovered the double entry system. Sir, what is the meaning of double entry system? Your double entry system is nothing but where each and every transaction, double entry system is nothing but each and every transactions would be having an equal of a debit and equal of credit. Your double entry system is nothing but your debit is equals to credit. What is debit, what is credit? We are going to learn in the next topic. Okay, so evolution of accounting. So accounting is as old as the money itself. Till 13th century it was in a primitive mode. So that is it was used only some people. But in 15th century, Dr. Fra Luca Pacioli has developed the accounting system and discovered the double entry system. So double entry system is nothing but debit is equals to credit. So this is about your introduction to accounting. Where accounting is an art. So the definition of accounting is nothing but the committee on terminology set up by the American Institute of Certified Public Accountants has formulated the following definition. So according to them, accounting is an art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of financial character and interpreting the results thereof. So this is your introduction to accounting. I hope you all understood. Thank you.